Good afternoon, traders. John Caruso coming to you here for March 29th with your currency outlook for the day. First, we'll take a look back at what we saw yesterday. We did see the Atlanta Fed come out and cut GDP for the first quarter, slash the estimates down to 0.6%. Okay? They initially told us a few weeks ago we were going to see 2.7% in growth. So they've cut estimates by more than 2% just inside of the last couple of weeks, okay? So what's going on here, people? You've got global GDPs slowing. You've got corporate profits down 10%. You've got global interest rates right now at all-time lows around the globe, okay? There's a reason for that, okay? Now, we have seen a more than 200-point rally in the S&P since the February lows. You could maybe see that continue for another 2, 3, 4% higher. But I'll tell you what, at this point, it looks as if you're trying to pick up nickels in front of a steamroller, because I think there's a lot more downside to come over the course of the next several weeks in the equity market. So that's just my spiel on the equity markets. Looking at commodities right now, we did see a cute little commodity reflation trade over the last month as well. We saw oil prices rally $10. We saw gold prices. We saw copper prices rally back to, everything pretty much rallied back to their 200-day moving average. I think that's coming to an end very soon as well. So keep that in mind. If you look at oil today, we're down 3%. You look at copper, we're down 2%. Those two markets right there are staples of the global economic market. So keep that in mind. Over to currencies now. The USD still looks like the best house on a bad block. We are long-term bullish the U.S. dollar. I'd look at maybe getting bullish the dollar off of a pullback to 95. Look at the euro. As far as the eurozone is concerned, there's growth problems in Europe, and now there's also political problems as well with the potential for a Great Britain exit from the eurozone. We get that vote in June, so there's going to be some problems and some investor anxiety as we start to embark on that over the next couple of months. Right now, looking at the euro, I'd become bearish around 113. I don't want to be bullish on the euro, so I'm not even going to go there. The top end of my range is 113, bottom end about 109. All right. Canadian dollar, we're trading around 76 right now, up 16. We all know the Canadian is a commodity currency, typically tracks the commodity markets. Right now with oil down 3%, copper down 2%, Canadian's flat. I'd look at becoming bearish here very, very soon on the Canadian dollar. You might see another pop back towards the 200-day moving average, but I don't think we're going to see much upside from here on out. Looking at the yen, interesting. We have seen a massive rally in the yen since the Bank of Japan last month went negative on interest rates. So what does that tell you? We had a big rally up. It looks as if we're kind of bull flagging. We're seeing some consolidation in the top end of that range. I'll give you the range. Probably the bottom end around 87.50, top end about 90.50. We're trading about 88.46. I do like becoming near-term bullish for the yen. Right around current prices. So that's all I have for you today. If you have any questions, concerns, anything, give me a call, 800-669-5354. Futures and options on futures may involve substantial risk. It may not be suitable for all investors.